In DEPCO Academy, we are going to tell you about an option trading. Derivatives drive more volume than spot trading in every market on the planet. What is spot trading? It is a buying on an exchange, or let's call it a basic trade. What are derivatives? That are options, futures, and swaps. Bitcoin and the crypto banks started with spot. But today Bitcoin derivatives are 5 times the size of spot trading. Derivatives always dwarf spot. We are in the very early stages of the same thing happening in DeFi. So let's focus on derivatives. They are not scary when you learn how to use them. We can use a derivatives and options on Opyn to protect some Ethereum against downside price risk. To buy an option will take you about 5 minutes. We think that DeFi is going to make derivatives more accessible than ever. So let's follow these tactics. If you're long in Ethereum, you'll probably expect Ethereum prices to go up, but the price can go also down, and all around. But if you are tired of this volatility and you expect a stability, you can use Opyn to protect your Ethereum. Keep the upside, and minimize your downside. With Opyn, you can either reduce your own risk by buying protection or de-risk someone else by selling protection. In this tactic, we will cover how does it looks like for someone to protect themselves against Ethereum volatility. So what is Opyn? Opyn is built on a generalized options protocol called the Convexity Protocol. What are the options? Financial options give the option holder the right but not the obligation to do something. What is that something? Depends on the type of option. There are 2 types of options, put options and call options. Put options give the holder of the option the right but not the obligation to sell an asset at a pre-specified price. For example, I have a bunch of Tesla shares and I'm afraid they're going to drop in prices. I doubt Elon's vibe. But I don't want to sell all my Tesla shares since I work there and hope they might go up in price once Elon's music skills improve. To protect myself against the possibility of Tesla crashing, I can buy put options on the shares, effectively limiting my downside while keeping my upside. Call options give the holder the right but not the obligation to buy an asset at a pre-specified price. For example, I want to buy Unisocks but I have too many socks right now, so I should probably wait for my laundry machine to put more holes in my socks before I buy the Unisocks. But, what if Unisocks go up in price since the entire DeFi squad wants to buy them? I can buy a call option on Unisocks so that I can still buy them at today's price a month from now. Opyn currently supports put options. So, for the rest of this tutorial, we will be diving deeper into put options. How does Opyn protect you? Opyn uses protective put options on Ethereum to allow option buyers to keep their upside while limiting their downside. For example, if you bought Ethereum for $100 and you are holding it, if the Ethereum price falls below $100 you will lose money. If you will buy Opyn protection, you are buying the right but not the obligation to sell your option at a pre-specified price. In this case, let's assume that the pre-specified price is $100, so if Ethereum price will fall below $100, you can sell your Ethereum for $100, which is above the market price. The best part is, you can now buy even more Ethereum with this fat profit. How can you do it? The basics requirement is desktop browser with MetaMask. You will need computer and some Ethereum, DAI or USDC in your MetaMask for the following section. First, go to opyn.co. Scroll down and select parameters in the Hedge Ethereum Risk section. You should become familiar with a few terms. The expiry is the date that your protection will expire on. You are protected until that date. Strike price is the pre-specified price that you're guaranteed to be able to sell your Ethereum at. The protection cost is how much it would cost you to buy 1 Ethereum worth of protection. Choose the parameters that work best and click the buy button on the row. This will take you to the buy page for that specific protection. First, connect your wallet by clicking the Connect Wallet button in the top right corner. Now click the Continue Purchase button on the center of the screen. The available liquidity on Uniswap tells you the maximum amount of Ethereum you can protect. For reference, 10 Ethereum protects 1 Ethereum. Input the amount of Ethereum that you want to protect and you will see how much it costs to protect that quantity in the box below. Hit confirm and sign the transaction through MetaMask to finish your purchase. And that is it. You're protected. You can check out the transaction on Etherscan. If the price falls below the strike price, you can exercise your option. That means, You can sell your Ethereum for strike price, and you could even buy more Ethereum with the profits if you would like. How do you sell your option? You can also cancel and sell off your protection early. Even if Ethereum price doesn't fall below strike price, but crashes close to this price, it can be profitable to sell your protection early since it is now more valuable than when you bought it. This should help offset some of your losses from the Ethereum price crash and hence acts as a valuable hedge. Thank you for your attention, and in name of DEPCO Academy and Opyn, we wish you a good luck with your trading.